Morning traders, welcome to the latest edition of Talking Bull. It's the 2nd of December, it's Non-Farm Friday. I'm Joe, joined by Steve, and yeah, I think it's going to be a good one today. Steve, how have you been over the last 24 hours? All good?
Yeah, all good, mate. All good. Enjoyed the football last night. So sad to see Germany go home. Das ist nicht gut, which is the only German I remember from my comprehensive school days.
It's finally come in handy.
Yeah, I've finally been able to use it.
Yeah,
I mean,
very much.
before today, it was all Das ist sehr gut when they sort of
Yeah,
like used to beat us on penalties, but that won't happen this year. So,
no.
yeah, over to someone else to break our hearts.
Yeah, indeed. Let's hope it's not Senegal on Sunday night. Okay, let's get into the news then over the last 24 hours, and then we can get into some charts. Really interesting set of charts to go through today, I think. But let's start with the headlines. So we saw a jump in US job cuts. The latest Challenger data recorded a sharp increase in layoffs to near 77,000 for November, which was from below 34,000 previously, and an increase of over 400% for November 2022. While there has been a 6% increase for the first 11 months of the year, with sharp losses in the tech sector. So now starting to see some pinching on the jobs front. The US manufacturing has seen a contraction as well. The manufacturing ISM index edged lower into contraction territory at 49. So 50 is the key level that we need to watch here. Last month it was 50.2. The forecasts were for 49.8. So it came in weaker than that, and in fact printed the lowest reading since May 2020. There was also a sharp retreat in new orders and a small increase in production. And there was also a reported dip in employment for the month, while prices fell at a faster rate, with prices index also registering the lowest reading since May 2020. We have seen some moderation in US inflation. The core PCE prices index increased 0.2% for October and slightly below expectations of 0.3%, with a year-on-year rate declining to 5% from 5.2%, which was in line with expectations. The dollar slid quite aggressively yesterday, taking out some major supports in the process. We'll come onto those charts in a moment. Remains under pressure. We saw the dollar dip to a fresh 15-week low and touched a 5-month low in early in the session today. We've also seen some sharp yen gains. The lower US yield supported the yen, and the Japanese currency has posted strong gains over the past 24 hours, potentially triggered by a number of stop losses being taken out on that. We saw dollar yen dip to a 3-month low with a break below 135, and also euro yen at a 6-week low below 142. So all eyes today on the US jobs data. The latest US employment data will be released on Friday, with expectations of an increase in payrolls of around 200,000, with no change in the unemployment rate at 3.7%. The average earnings data will be important also, with expectations of a 0.3% increase. So let's take a look at some charts. Steve, do you want to kick us off with a look at Bitcoin today?
I certainly can. Let me just make sure I'm sharing my screen properly. Yeah, let's take a look at Bitcoin. Obviously, I was looking at Bitcoin yesterday. Hold on, let me
We're
get
still
screen
waiting
up.
for your screen.
Yeah. And I talked about the resistance up at after the really decent rally we saw, the risk-on rally we saw on Thursday. Wednesday. Let's get the days right. And I said we've still got to get above this 17,230 level. And in a good old-fashioned style, it did take out that level by about 20 ticks. It got up to 17,250 and reversed really sharply. So obviously we'll talk about my gun-to-head trade later, but just sort of like looking at the 4-hour chart, really, just to sort of like see that that level that we hit yesterday. This is where I put the top of the resistance in at. We're now down below that band of resistance that we've got. It's quite a wide band, 250 point band, and yeah, breaking up through that downward trending resistance line and reversing quite sharply. So still, potential for the move up. However, do be aware if we do get below the low of the 30th of November, the 4 o'clock 4-hour candle, 16,722, then it does open up the downside, because it was quite sort of like a vacuum packed rally, we call it. So yeah, on cryptos, basically, still overall, the overriding theme for me is lower price action, lower prices over the medium to long term. That's not changed. Short term, we've had a nice little rally. That was an opportunity maybe to get out of some of your stagnant sort of longs that you've held for such a long time. I don't know what the average price is of a Bitcoin owner. I thought it was around about the 20,000 level mark last time I heard. I haven't heard much being talked about it since we've broken down below that level. So there's a people in a lot of pain.
Can we have a look at the volume profile? Will that give us an indication?
Yeah, I suppose it'll give some sort of indication. Probably not.
It's a fixed volume.
Yeah, fixed volume. Where are you, baby? There you go. So we'll look at this. Maybe it's not giving us it, Joe. Actually, maybe this is one exchange that doesn't give it. There we go. It did give me it, but I just didn't have it on the right chart.
It snapped to the low and the high.
Yeah. So
you need to go all the way to the high, maybe. Indicating it's around here.
Yeah, I suppose this is. But if we really need to take it back probably to that level, would that give us an indication? I mean, that sort of like tells us that most of the volume did take place around about 8,000. So, but I think if you look at these levels here, all
I'd
the way
go
back
from maybe 2020, the low.
Yeah.
When it started to become, I guess, more mainstream.
When we started to take it seriously, maybe even from here.
Yeah.
Yeah, that still gives the same indication. I suppose you could sort of look at these were the sort of like the real early adopters down at these levels, or the sort of like the maybe the more professional clients, and then we got the retail diving in all the way above here. So retail, I think, from about 28,000 upwards. Yeah, so whatever way you look at it, it's not very good. Obviously, again, retail investors pay the price for the sort of like the timing of when they get in. It's normally after the move has happened. Take a look at moving over and stopping boring people with that. Take a look at gold. Gold had a really decent move up yesterday. On Wednesday, we had the move higher into resistance. That was actually this green area is a pivotal area that we've gone back over time and seen decent two-way price action over it, even as far back as sort of August. And the resistance level that we've got above the 200-day moving average, we managed to get above that yesterday. 1808 was the top of that resistance level. That was the swing high from the 10th of August. Overnight, we've had a little bit of a pullback. We're still trading around about $1,800, which is pretty decent. And for me, we've really this double bottom has really played out nicely. We talked about it. We said the neckline was around about 1730. We had the revisit over the 21st and 23rd of November. We broke slightly below the 1730, but not far below. That was the retest of the break of the neckline, and we're extending higher. The target, the measure move target for that is 1844, and I still think that's potentially on the cards, especially after the last 3 days of really positive price action. So yeah, we're trying desperately to clear above the 1808. It might take a little bit of work, and we might have some sort of pullback, but the 200-day moving average breaking above that and seeing this 55 and 100-day moving average turning positive is very exciting indeed for gold. Silver, we've got the inverse head and shoulders formation we've been talking about. And again, we had a retracement, a throwback below the neckline, but we've managed to sort of hold above it and push higher. We're through the band of resistance that we highlighted up to 2250. So seems to be marching on quite strongly. And obviously this has been helped by the weaker dollar. We'll take a look at the dollar index in a second. Joe's going to take a look at that. Copper also having the same sort of reaction. The crossover on the 55 and 100-day moving average is positive on the daily chart. So that's obviously a longer term picture. We've got this resistance coming in, which was significant all the way back in March 21, but maybe not so significant now. However, it did form a top after a swing low on 28th of June. and the break higher through it gives us maybe a better target, a better level to look at of 3.95, just below the $4 level, which is, again, that would mean we've superseded the 200-day moving average. Overall, this from the swing high to the swing low, we've got some Fibonacci resistance levels coming in. Let's show the 61.8. It's a little bit more interesting. We're broken above, well, we're approaching the 38.2. We've already broken through it and pulled back. 38.2 coming in at 380, 386. 61.8 is up at 430. So I don't think it would take a great deal to sort of like really test that level once more. But we have to overcome the initial resistance first and the 200-day moving average. But as I say, the 5,500-day crossover is significant. Taking a look at the WTI crude oil charts, with this reaction from a break of the support of $76 has continued into yesterday. However, we did see price action stall and reverse quite sharply in the afternoon. That forms a bit of a shooting star type candle. So a little bit of a concern for bulls at the start of play today. Obviously, we've got non-farm payroll coming out. That's going to add a bit of volatility to all these commodity markets as per normal. Resistance above comes in the shape of the normal 5,500-day moving average, which are quite close, $84 and $87. Yeah, and support below, obviously, we're posting higher lows. So yesterday's low comes in at 79.94, and that would form some sort of support. The $80 mark, obviously, quite a significant psychological level. The Brent crude oil has sort of exaggerated that shooting star slightly more, and that does look a little bit like we could have a bit of a turnaround. So really important to for this formation to sort of take shape. It's a 3-candle formation, evening star formation. You have the rally higher, the shooting star type candle, and then a sell-off towards the bottom of the previous day's price action, or the main green candle's price action. That would form the formation. That would give us confirmation, and then we'd look for further downside. So a little bit on the back foot if you're looking at that chart compared to the WTI crude oil. Natural gas, however, is not in two minds. It's significantly moved into this downtrend. We've got now 7 days of negative price action on natural gas. That's continued lower, well below now all the decent moving averages. Maybe even if we throw an Ichimoku cloud on there, bang, bang, we can sort of see we've remained in the negative cloud. So that's, something to watch. That's quite significant, really, to sort of break above. We've got the really clear levels above 730. But it doesn't look like it at the moment, and we always expect a bit more volatility when price action moves into the cloud area. So yeah, very much a downtrend on natural gas. Long may it continue into the cold winter.
Indeed. Thank you very much, Steve. So let's take a look at some FX markets then, shall we? Starting off with the dollar index, and we can see that this is in the process of breaking down through some pretty significant support levels. So we highlighted this level here, 105.34. Yesterday we posted a strong red candle going through that level of support, also taking out a 38.2% fib level in the process. We are now challenging these support levels here from the 10th of August, and we are attempting to move below those as we stand at the moment. Just wondering, Steve, whether or not we've formed maybe a head and shoulders top on this. Maybe a couple of ways of drawing this. I was going to go with this being the left shoulder initially, this being the head, and then a very small right shoulder that's potentially formed here, taking out the neckline there, and looks as though we might be heading lower on the back of that. You could also argue that this is a left shoulder here, this is the head, and this is the right shoulder, and that would be a downward sloping head and shoulders top. I think I prefer this one. So this for me really is the proper neckline. I think we always need to take out the horizontal level. Yes, we have taken out a level there, but I think if we get a close below this 104.63, that would really confirm a big old top pattern in place here on dollar index, and we can start looking for lower prices. In terms of measured moves, I think we'd be looking at a move somewhere close to the 78.6% fib level, of this entire up move here, the measured move of the top pattern comes in at around 95.96. We've got the 78.6% fib at 94.93. So for me, it is a case of selling into rallies, potentially towards, I think, 106 on the dollar index, and I will be looking for lower prices to play out on that. So still looking bearish, and we are getting more confirmation of that as the days go by with the negative price action that we're seeing. I mean, there's some really classical patterns here on the chart, and really, we're seeing this across the board. There are a number of FX pairs that are respecting technical analysis theory at the moment, and that's always really a good thing for us as technical analysts. So long may that continue as well. Let's take a look at Euro US dollar. That is breaking up as you'd expect. So again, potential here for an inverse head and shoulders. Been highlighting this 38.2 at 106.10 as the desired level on the upside of where we thought prices could get to, and it looks like we are going to get there pretty quickly. We saw this bottom pattern form. We saw a breakout above this resistance at 100.94. Then we saw prices consolidate around here before breaking out of some sort of consolidation continuation pattern, and prices are moving to the upside. So again, I think it's a case of buying dips here, probably towards 104.30, looking to target initially a move towards 106.10 to 106.52. Depending on how we react at these kind of levels, if we get through them with relative ease, then it opens up a move towards the 50% Fibonacci retracement level, which is up at 109.42. So looking pretty strong on that front. Let's take a look at cable. Big upward move yesterday, breaking through what I've highlighted here as maybe a continuation pattern, maybe some sort of bullish flag, and we've rallied into a 50% Fibonacci retracement level at 122.82. I've got a couple of drawings on here, so let me just get rid of one of them and focus on this one. So this is the fib levels that go back to the highs that we posted back in February 2021, down to those panic lows that we saw in September. We've already retraced 50% of that move into 122.98. Price is stalling at the moment, so I wouldn't be surprised if we do get some sort of pullback and form some sort of huge inverse head and shoulders here maybe, and then we could be looking for higher prices. And obviously this is in line with the bearish view that we've got on the dollar index. So if we can get above this on a closing basis, this 50% fib at 122.98, then we bring into focus the 61.8, which is at 127.57. Let's take a look at Aussie dollar versus the US dollar. So this was struggling to break through resistance at 67.97, these previous highs that we posted in November. We saw a close above that yesterday, although it was off of the best levels of the session, but it still seems as though we're holding on to this newly formed support at 67.97. So still scope, I think, for higher prices. Looks as though, again, we may have formed some sort of continuation pattern here, maybe something along the lines of this. Little triangle, wedge, pennant formation, and potentially prices could start moving higher. The measured move of this really neat inverse head and shoulders comes in at 68.73, so not far for that to travel before it hits that target. And then we'll have to reassess our upward targets, but I guess we'll be looking for a move up to these swing highs from back in August, up at 0.7136. Taking a look at dollar CAD, so really neat head and shoulders on this one. Started to get a little bit worried about this earlier in the week as we punched through the neckline and a really strong close on Tuesday. But on the Wednesday, we engulfed all of the previous day's gains. And yesterday, we formed a doji candle. We actually posted some gains, considering the weakness that we saw on the dollar index. So that suggests that the Canadian dollar is still quite weak as well. So these two are kind of counterbalancing each other at the moment. My view is still for lower prices here, and that the dollar weakness will overcome the Canadian weakness in the short to medium term. Dollar Swiss was quite interesting. We've been talking about this upward trending support line that's been in place for a significant period of time. And yesterday was the first time that we saw a close below that level. We've seen it tested on a couple of occasions, but finally we saw a break and we're moving lower as well. We're taking out these previous lows that we posted on the 15th of November and look to be heading towards this 61.8% fib level. So for me, I'd be looking to sell into rallies towards 94.30, targeting a move down towards the 61.8% fib level. Be interesting to see what kind of reaction we get there. If price action slices through that, then we're looking for a move down to support levels in between 91.58 to 90.99. Also, a completion maybe of a really large range top here, and that would indicate much lower prices over the medium term. Dollar yen, very interesting as well. We highlighted a major support of 135.58 in the previous sessions. We were also concerned about this level here at 137.65. We didn't have to be. We sliced through that aggressively yesterday, posting a really large red candle, closing at the lowest levels of the day, also closing below this support here that we had at 135.58. So now looking for lower prices here towards this major level of support between 131.25 to 131.49. So anything linked to the dollar at the moment, trading quite technically well, and therefore I think there's some pretty good opportunities to focus on the patterns that are emerging here and just keep trading in line with the shift in trend. We have had a request to look at sterling Oz. So I'm going to take a look at that. If there are any other requests, please feel free to post them up. It doesn't have to be an FX market. Any markets you're looking at, we'll do our best to go through them. So this is the daily setup on sterling Oz. So we've seen sterling react really nicely against the US dollar. At the moment, looking at sterling versus the Aussie dollar, it would appear as though the pair is trading within a bit of a range. So a bit difficult to call this either way. If we look at yesterday's price action, we posted a really strong candle engulfing all of the previous day's losses, which I think is pretty positive. But there is a major level of resistance here that we need to consider between 181.26 to 181.99. And while those levels continue to be in place, I still think maybe there is potential for this to move lower. We do have a sequence of a very small sequence of lower highs. So if we get a close above these levels, then if you are short of this, I think you need to reconsider your position, because it looks like we formed a really large bottom and prices may continue to accelerate away on the upside. But for now, if you're short, providing you've got stops in a sensible position, maybe around 182.35, then there is still potential for this to continue within this range and maybe head towards the lower end of the range at some point towards 174.95. Hopefully that was useful for our viewers who requested that. Steve, any other requests that you can see?
No, didn't see any other requests. That was just the sterling Oz, yeah.
Okay, morning Majid. Majid is one of our analysts. He's tuning in today. I hope you're doing well, buddy. Okay, Steve, let's take a look at some indices, shall we?
Yeah, I mean, me and you had a good conversation about the indices yesterday. So, oh, sorry about that. Yeah, and we were talking about the break of the resistance, the break of the downward trending resistance line in the Dow, which was confirmed, breaking above this horizontal resistance at from the 16th of August, which was really nice and looked really positive. The 5% up move in Dow looked great, and we could have all got pretty carried away with that. However, we did have, I was a little bit concerned that I wanted to see a little bit more, maybe not on Dow, because I think Dow has broken higher. I'm still a bit skeptical, like I always am, but you've got to respect the fact that it has broken through that resistance and looked pretty positive. It did sort of come back and retest the sort of the midpoint of the previous day's price range, which was pretty decent. But it did close lower on the day, although it spiked a little bit and got up to a new high of 34,628. Today's price action a little bit on the back foot. The levels that I was sort of like really looking at from the indices point of view was the fact that Nasdaq hadn't pushed through this 50% Fibonacci level. It's not one of the major ones that we look at, but it's still a technical level. It hasn't really got up to challenge the downward trending resistance yet, so there may be still opportunity. And even if we sort of like do have a further rally today, maybe on the back of non-farm payrolls, I still think we need to clear these levels around about the 12,000, well, maybe above 12,500 to really sort of get me excited about the Nasdaq having a chance of recovering. We do have this inverse head and shoulders, which we've broken above. So really, from a technical perspective, this we should be looking for maybe the measured move all the way up to 12,950 or 13,000, and maybe the non-farm can give it a nudge today. We'll wait and see. And also the S&P, the downward trending resistance line, we're yet to see it break above. The inverse head and shoulders that we drew on here was slightly different to the NASDAQ one if you compare them. And in this one, it's hit its measured move target of 4,044. We are above that level. That level is now turned into support because we've also got the 200-day moving average sitting just below that. So downward trending resistance still has to break. We're running into non-farm payroll. Anything can happen. I'm going to keep my hands in my pockets today, although I've got to do something for the gun to head trade idea. But overall, I'm not going to be risking anything today.
Okay, so maybe it's quite sensible. Right, let's take a look at some. Did you look at the European indices? You didn't, did you?
It sounds like you're challenging me because when you said you're quite
Sorry,
sensible,
I
Steve,
was.
that doesn't work. That doesn't
No,
work for me.
doesn't.
No, I haven't looked at the European. I
I've
can have a
got
quick.
them up on the screen now. I was just looking at
Yeah,
the DAX. Same
yeah,
sort of situation. And to be honest, given the weakness that we saw in the dollar yesterday, I would have thought that that was encouraging more risk-taking appetite, and it doesn't seem to have done that in the European markets. We are still at this 61.8% fib level on DAX. Major levels of resistance here, a big band really as high as 1480, 14,812. So it looks as though it's maybe consolidating a bit here, but maybe the potential that it could start to roll over, given that it's been such a strong move to the upside. Maybe the market's already preempted that this dollar sell-off was going to happen, and we've seen it, shoot its load already. If we look at the Eurostox 50, it's a similar situation into a big band of resistance. We didn't really get any follow through yesterday following the big move that we saw on Wednesday. So 4,026 is a big level there that needs to be overcome. And potentially lining up for 2 days of weeks today. Obviously, non-farm payroll could change all of that. If that comes in better than the market's expected and indicate that the jobs market is okay at the moment, then maybe we'll see a big break to the upside, and that could trigger a number of stops. FTSE 100 was quite interesting. We know this is trading in a very sharp bullish channel. We know that it took out the sequence of lower highs and also closed above this previous high from back in August. But the reaction from that point has been quite negative. We posted losses yesterday, not quite an engulfing candle, but we are following through on the downside today, now challenging the lower end of this very tight and narrow channel, and also testing the reverse side of this downtrend line. So it'd be interesting to see if the buyers step in here. Big level of resistance at 76, 78 in that blue line that we've got there. And we have to go all the way back to the pre-pandemic highs in January 2020. And we can see that that was a resistance that is pretty formidable, and it's going to take a lot of effort to break that down. And given the velocity of the move higher, I'm not sure it's going to do it in one go, but who knows? So
yeah,
that's that
brilliant.
for the indices, I think. So let's move on to the gun to the head trades then. So we post these up on our trading view profile. I'll come to them in a minute, but just a refresher of what it is we do here. It is just a bit of fun. We come up with a trade idea as if we had a gun to our head. What would we trade right now if we had to do something? So we pick a trade idea live on the stream, we post them up. They must have stops and targets because obviously risk management is super important. They must have risk reward ratios better than 2 to 1 as well. And we close these trades at 9 p.m. UK time, or when the stop or the targets are hit, just for the purposes of record keeping and meaning that we don't carry any overnight risk. So yesterday I was trading Aussie dollar. Looked as though it was potentially reversing, but obviously we did see a strong move lower in the dollar index yesterday, meaning that this would have moved higher, and it did. If we click the play button, we can see that it was stopped out only by a couple of ticks actually. It didn't really race away in the same way that dollar index broke down. So that was, I guess, quite encouraging for that particular pair. It was the right choice, but obviously the wrong stop. Steve, you traded Bitcoin yesterday. You were selling it again,
Yeah.
as you put on there. Big band of resistance, looking for a reversal there, and you got one. So you were 0.65 R on side on that at 9 o'clock. So a win is a win. Still looks like it's got some potential to move lower. Are you selling it again today?
Oh,
Could you do it
obviously
again?
so. Yeah, because you know what? I've looked at non-farm payroll or non-farm egg roll, as we used to call it, is it has got that sort of like it's going to throw the volatility into the market, and Yeah, I'm going to go for it again. I'm not going to sort of like waffle too much, but everything else looks a little bit pivotal. So I think we could go either way on a lot of them. Even the gold, I'm sort of thinking gold always has a decent level. I might have to just jump to the postman, but I'm looking to sell around about current levels. The stop will be 17,289 and the target will be 16,071. I'll be back shortly.
Okay. Thank you very much, Steve. I'm taking a look at dollar Swiss actually. So this is the hourly chart on the dollar Swiss chart, and for me, it looks like a really neat looking range here on the hourly chart, going back to November the 1st. So over the last month, we've seen prices range within this period here. In the last couple of sessions, we saw a retest of the upper end of that resistance line. And what I'm also seeing here is potentially a head and shoulders top within this range. So that may indicate that prices could move lower. In terms of the measured move target of this head and shoulders, let's take a quick look at that to see what that indicates. Need to just move that back to the top. So pretty much back to the lower end of the range, maybe just a tad below it. Ideally, I want to see a move below 63.70 to really get this going, but I've got a gun to my head, so I'm going to go with this right now. And I'm going to go with an entry at 63.74. I'm going to target a move down to the lower end of the range, and I've picked off 63.02 is the level that I'm interested in, and going with a stop loss at 64.00. Let's just keep that nice and round, giving me a 2.74 R risk reward ratio on that. Nice range setup on the hourly, nice head and shoulders forming, hoping that these markets continue to trade in technical fashion and these classical patterns that we keep seeing continue to work. So that's my trade of the day today. I'll get that published up very shortly. Okay, day ahead. As we know, it's all about non-farm payrolls today. Just to reiterate the numbers that we're looking for here, we are expecting an increase in payrolls of around 200,000 with no change in the unemployment rate at 3.7%. We're also keeping an eye out for the average earnings data, which will be important. Expectations there are for a 0.3% increase. We've also got the Canadian employment report at the same time. These are both out at 1:30 UK time. So ahead of that, we may see some choppy and indecisive price action, but after that we could see a pretty significant bout of volatility. It generally tends to be a big market moving event. Next week we've got the Reserve Bank of Australia coming out with their latest policy decision, and the following day we've got the Bank of Canada doing the same thing, so that could be quite interesting as well. But yeah, all eyes on non-farm payroll today.
Excellent.
Cool. Thanks for watching, everybody. I hope you've had a very good week on the markets, and have a fantastic weekend. We'll be back on Monday to go through some more charts and look at the latest news once again. And until then, trade safe, everyone.
Cheers.
Bye-bye.